of the things that came as we worked through this deck and this name was a lot of this is unseen, and a lot of the best things about this name I think are not reflected in the valuation of the stock. So if we look from a segment bottom-up perspective, a lot of the challenges that we read about and concerns we read about in this name are largely overblown. So if we look at the business jet, general aviation market, we think the market is still fighting the last fight there. It's still in recovery from the financial crisis, and there's a growing aftermarket component and a steady stream of new products that tend to fill in the gaps. For Bell, we do have a commercial helicopter reset that relates to the decline in oil and gas spending or an activity, fewer workers flying to platforms. But the defense outlook is a lot better, and we also have some new products coming in there. In terms of the system segment, ship-to-shore connector, we'll hit that big piece of revenue there coming in, particularly in the out years. And then on the industrial segment, we think it's an interesting set of businesses, but they probably belong somewhere else, and that's something we'll hit on what could be a potential value unlock story there. As Emo will probably talk about in greater detail in a second, we're going to review the defense spending outlook. That's a rare point of political agreement on recapitalization. For the V-22, there's a lot of concern around that program, and we'll hit on why there shouldn't be perhaps as much concern on either that or the H-1. Longer term, a lot of great products coming out listed there, including some of the business jets. For the valuation strategy and catalysts, we'll show, I think, a number of metrics that Textron is a cheap defense name, cheap for these exposures, and really cheap relative to peers and its own history. We have a really good string of visible catalysts coming in this name, including the V-280 competition next year, or the Army's Future Vertical Lift, where they have the V-280 competing, potential V-22 deal, and the likes. We have a large number of fairly visible catalysts coming in the next year and a half. We think in somewhere in this quarter we're going to get a good entry point in the name. The Honeywell pre-announcement certainly helped set that up. And we think that overall Textron is likely to be worth well over $50 a share as some of this great future growth potential becomes a bit more seen and a bit less unseen.
Moving on to slide 10 here. What I'd like to do is go and describe the defense budget environment, which is a driver of so much of Textron's revenue. On 10, I've got so 3 bullets on where we are overall in the defense budget. Number 1, we're operating under a continuing resolution. So it's keeping the government funded through December 9th, obviously past the election. And in the lame duck session, which will become necessary after the election, and of course the election itself will shape what happens there, there must be a resolution of the differences between the House and the Senate and the administration. But the common thread throughout all 3 of those points is that the defense budget needs to be increased. The main difference of opinion between the administration and Congress is that the administration insists that if you increase defense, you must also increase non-defense by the same amount. And that's the main difference of opinion. But the common factor here, what should be remembered, is that there is consensus that defense needs more money. The second main point is the FY18 budget, which will actually be presented by the new president, is being prepared by people in the Pentagon now, obviously Obama appointees. That budget will exceed the Budget Control Act ceiling by $32 billion. So will the next president submit that budget to the next Congress? I think yes. My information is that if Hillary were to become president, her administration will stay along the lines of the Obama budget plans, and we will not really see changes until FY19. And I think those changes will be within that top line. In other words, there will be no dramatic reductions. And the third main point that I like to talk about is we will see higher defense spending. There is a need to increase investment in terms of R&D and procurement because of our recapitalization, and it's going to fewer and fewer programs. So we have shipbuilding and aircraft programs are ramping up to their full rate production rates, and that's taking a larger proportion of the budget. So fewer companies getting more money.
And just sort of taking away the upshot here, the key points is that the defense spending environment is supportive. On 64, you have these key platforms likely to see important long-term wins and evolutions and product introductions, right? So I think we went through those in some detail, but when you actually model the numbers, they're big. It's not small stuff. Commercial is also the most common negative story we hear. This is never going to come back, all this kind of stuff. The key is to get out of a cyclical at the peak. These are not peaking cyclicals. And product introductions are offsetting some soft market conditions. That's already happening. And again, these are just not peaking cyclicals. And then finally, when you look at the valuation, pretty much any way you whack up the valuation of Textron, you will find, at least we find, we try and do it a lot of different ways, it's either not expensive or actually pretty cheap. It's very easy to get to estimates that are above consensus when you factor in some of the programs that are coming their way. And it's very hard to find metrics that make it look remarkably overvalued, even in a fairly flat market. So I think one of the things that's also just true about the stock market is it's the story around the name. Is this a name that's cheap with an evolving story? And when we look at these platforms and the scale of them, it's very easy to see this, the narrative evolving from Textron being a company that is facing a business jet, L market or whatever it is, to one that has the next, JSF of helicopters, great platforms, growing to franchises and great technology, and made some great investments. And I think that is, the kind of narrative shift that can really take a value name into the realm of a growth valuation. So with that, we'll take some questions.
Yeah, okay. That was really good work, guys. And I think exactly how we envisioned the policy sort of fundamental pair going together in this kind of presentation. So certainly excited about it.